Welcome to Transform Now, the podcast brought to you by SS&C Blue Prism. Agentic automation isn't just the next step in automation, it's the future of how work gets done. By enabling intelligent, autonomous agents to take action, adapt, and collaborate, organizations are unlocking new levels of productivity, growth, and customer delight. Join us as we explore how agentic automation is reshaping work for the better, for customers, employees, shareholders, and most importantly, you. To stay on top of the hottest topics in the world of agentic automation, subscribe now. Let's get into the show.
Welcome to the Transform Now podcast. I'm your host, Michael Marchuk. On this episode, we're joined by Robert Reed, a veteran financial services leader with deep expertise in operations, compliance, and risk management. Robert serves as Chief Operating Officer at the International Bank of Chicago, where he leads major operational and compliance initiatives. He has also held senior roles across institutions like JP Morgan, the Options Clearing Corporation, BMO Capital Markets, and others, bringing a wide lens on how financial systems operate and evolve. He also operates an advisory firm in FinTech, Reed Advancement, which advises organizations on risk, governance, and emerging technologies, including the responsible adoption of AI in financial services. He's a strong advocate for building AI solutions that enhance operational efficiency without compromising compliance. Welcome, Robert.
Thanks for having me. Cool to be here.
I'm glad that you're here. So can you tell us a little bit more about yourself? Because I gave you kind of like the broad overview here, but I'm sure there's more to it.
Sure. I mean, look, I've spent the 25 plus years of my career trying to learn every facet of the financial service industry from start to finish. It goes way back to when I was on the floor of the Chicago Stock Exchange, when they were still trading in fractions instead of decimals. So to date myself a little bit, if you're ever looking for something fun, look up what a teeny is. It was something that was said quite often on the floor. But, look, it was always about learning as much about the industry from start to finish. So that at some point in my career now, as I'm starting to get to the later years, that I could start my own advisory firm like I am, as well as sit on advisory boards for financial institutions. So whether that's in the back office, front office, or middle office of operations or compliance, I wanted to know and see it all.
So you've talked a lot about using AI to enhance human judgment and not replace it, which is great. What does that principle look like in practice when it comes to automating compliance workflows in legacy banks, and why is that balance so important?
Sure. I think there's two reasons why it's important. One, the regulators aren't ready for AI to make decisions yet. Let's just be blunt, right? It's not there yet. And I think we can all agree with the hiccups and the white noise we see with ChatGPT and some of these other things that it's not quite there yet. What it is fully capable of at this point, though, is doing what I'll call the legwork of the old 80-20 rule split, where 80% of the time you're pulling the data, 20% of the time you're doing the analysis. What AI should be doing for you at this point is doing the 80% of the data work, the legwork, but you can spend more time doing the actual analytical work. And that's what Reed Advancement and some of the things that I've worked on in the past really does, is it gets rid of that time-consuming portion of it so you can spend more time with the analysis and come to a better resolution.
That makes a lot of sense. So you talk about the regulators not necessarily ready for this whole compliance with AI. And I know a lot of banks are currently struggling with these hidden failures or operational compliance weaknesses that aren't really visible until something breaks, right? So how does AI-driven automation help surface these latent potential failure points before they escalate into a major crisis?
Look, I think most of it centers around the data, right? And whether you're talking about your current KRIs or KPIs, whether that's being built with just general dashboards or with AI, watching those things intently for not just understanding of where your risk might occur, but also what might be failing underneath, is a big place to start with this stuff. So as AI does some of this legwork that we just talked about and pulls the data and puts together these dashboards for people, you're not just looking for the number to look wrong because it might look wrong for risk perspective. You're looking at it for possibly looking wrong and then digging into why the number actually might be wrong, not just going in a direction you don't like. So I think that's one of the areas in which AI can do a lot of this work for us now, is it's doing, again, this legwork for you that makes it consistent, repeatable, and we'll say without human error, jokingly. But to some degree, it's taking that extra step when something looks weird to dig into why it's weird, not just assume that the AI is correct and moving on. So that's where you find those weaknesses before they get too out of control.
Is there any specific use case or that you've seen where AI has uncovered some of these latent compliance issues that maybe a traditional system or review had missed?
Latent, I would say no. More around the realm of the human aspect of it
Okay.
again, because what regulators look for most times in, let's say, the AML space or in the fraud space is consistency in your review. And consistency between humans is, as we know, just difficult, right? Your
Right.
perspective on what something looks like versus my perspective of what something looks like is just different. And how we might look at a standard deviation or something else is going to be inconsistently looked upon through this lens. So where AI steps in for that is it produces this output at the end of the day, right? And now you have the analyst able to look at this output and determine whether or not something is maybe suspicious or fraudulent or whatever other label you want to put on top of it. But what the AI can also alert you to is when something else is an underlying issue, the data that it's putting out may give you that indicator. So that's where I think that not so much latent, but in everyday practice, this is where this could come up as an example where it might save you a lot of headache. You'll know relatively quickly if the numbers start going crazy that you might have an underlying issue versus just, hey, look, the risk got bigger. You know what I mean? I mean, sometimes it is the risk just increased, period, end of story. Transactions got wilder. Things were further out from the norm or the average. And that's possible as well. But understanding where the numbers come from and what the AI does for you so you can dig into it, I harp on a lot, but I think it's key to so much because I think what a lot of financial institutions want to do is they want to put this in place and then never look at it again. Right? It's handled,
Yeah.
right? The computer's got it. We don't have to bother with it. And then all of a sudden a couple numbers go wrong. I think they missed the point that the number could still be wrong. Right? Not that the risk increased or decreased or we're just out of whack, that there might be something wrong with the number itself. So understanding those components to quickly address that is key in all this to prevent those errors from, again, just growing into enormous headaches and fines.
Exactly. So you brought up something interesting here, important that, we talk about the systems and the data that's in, all this relies on. And oftentimes these systems are not necessarily the most modern systems. I'll put it in a light term. So it seems like this could be continue to be a barrier for deploying more intelligence into these architectures using AI because the data is in systems that are maybe would you consider legacy. So what kind of strategic approaches have you seen work best for integrating AI into these older systems without disrupting the core operations?
I think the biggest component to be successful in this is what I'll call a slicing, right? We look at things in total from a process perspective. And to some degree, that's great. And wanting to automate, say, an entire process sounds great on paper. At the end of the day, it will save you a lot of time. But the reality is that when you try to bite off that giant chunk and completely automate it from start to finish without any kind of real parallel or testing, you may not have it quite right. And you're not going to necessarily find it. So I like to slice things into little avenues or little micro steps and get that tested and tuned and properly running parallel before I go on to the next step. You're gonna end up with a better product at the end, and you're gonna find other institutional issues that may arise because you've now sliced that process into something.
So have you seen anything that's worked best when integrating with maybe say some of these legacy systems? Because like I said, most banks have a variety of systems in place. Some of them are extremely modern and some of them aren't.
Yeah, so I'll go back to kind of the slicing technique that I was talking about. Most of the things that happen in, say, the compliance world are holistic reviews, right? You're not just looking at one piece of it. You're looking at these 14 pieces to determine if something is right or wrong or suspicious or not compliant. What, I've always taken the approach of, and what I even do in practice with the financial institutions I worked for, is I said, if we need to do a negative news search on our clients when, say, transaction monitoring pops an alert, let's automate that process. Let's make sure that that's right. Let's make sure it's hitting the websites we want to check. Let's make sure it's finding the right people, or at least, potentially finding the right people, because you do have to do the checks at the end of that. But let's automate that. Okay, now we've got that tested and tuned, and now that's right. We think it's as good as it can get. Now let's take the second component of it. Let's make sure that when we're pulling whatever time frame period of data we need to pull to do this analysis, it's pulling that data, it's pulling it correctly, and it's capturing everything and doing that testing and tuning to make sure that that's correct. I'll give you an example of how quickly this can go crazy, right? So I like to use a pizza parlor example. So you have a pizza parlor that recently was in the news for something nefarious. So you're going to do an analysis, right? And you're looking at this pizza parlor, and consistently every Monday they deposit roughly $1,000 in cash. Okay, that's their pattern. It's been their pattern forever. You look back the last 6 to 8 months, it's been $1,000. Now all of a sudden you're looking at a date and time where they deposited $8,000 in cash, and your AI pulled this and pointed it out. Is it really suspicious? I mean, it sounds like it's suspicious, right? I mean, it could be suspicious, but you need to take into account further steps. So you need to make sure that your AI is looking at all these components. Now, all of a sudden, after you find out it's $8,000 and it came in, you also find out that they hadn't deposited for 3 or 4 weeks at that point. Okay, well, now all of a sudden you're sitting there going, well, on average, that would roughly be $4,000, let's say, but it's $8,000. So that's still a little weird. So you got to keep digging deeper, and you have to have your AI dig deeper into this. Now, all of a sudden you look at it, it's the Monday after Christmas and New Year's. Well, now $8,000 from a pizza parlor doesn't necessarily seem crazy during that time period, because let's face it, we all eat out during that time period. We had a lot. We got so much going on. We're going over here. We got this to do. We got that. You're ordering out more, and that just might be what they do. Then you take another step back and you look at last year's time frame of the same period, meaning the Monday after the Christmas and New Year's holiday, and they did $7,900 in that cash deposit. Now it's not so suspicious, but if you take your AI component and you only look at that one slice and that one sliver, you're not getting that whole picture. So you have to continually drill down and drill down and drill down in those slices to make sure that you're getting to the right look, and then you can move on to the next component. So it could go sideways real quick, where all of a sudden you looked at 6 months, they've only ever done $1,000. Now all of a sudden you're filing a SAR on this pizza place, and there's really no need. And this was all triggered by something in the news that ended up being that the owner got arrested for swearing in public. Something insane, right? Like nothing of any real financial consequence. Let's put it that way. So it's continually understanding what it's doing for you, what it's testing, and what it's looking at, and then pulling each of those components in to find those things before it goes awry.
Yeah, that makes sense. So kind of getting on that same avenue here. So with regulators increasingly focused on explainability and auditability of AI systems, how should banks be architecting AI and agentic automation so that it's both effective but also defensible under scrutiny? So you just mentioned a couple of things that have happened, but how do you do this over maybe a broad range of AI activities?
Well, first and foremost, you take them for the ride, right? You don't do this in a vacuum, right? You don't decide one day you're going to do this. I'll talk to your regulators, and then have them come into your annual exam, and all of a sudden you throw this black box at them and you hope they like it, right? So anytime we've been a part of it, I've been a part of anything where we've built something out, whether that's just proprietary software or some kind of automation. It's taking them along for the ride, letting them see the inner workings, if you will, the testing, the tuning, the papers that back up what we say it's doing. And then, eventually they're going to test it themselves to get comfortable around it. But that's all about then bringing them along for the ride the entire way. Hey, we're thinking about doing this. This is what we're going to do. This is how, who we're going to do it in. This is our game plan. This is how we're going to walk it through and step it through. What are your thoughts on that? Now, anybody who's ever worked with, the federal regulators know they can not really say yes or no. They can say it's adequate, right? You're never going to get a slap on the back and an attaboy from the regulators. That's not how it works. So if they say it makes sense or it's adequate, then you're on the right path, and you continually, talk to them and provide them with information so that at the end of this, they're not, losing their minds as to what you just did without any kind of awareness. I think that's the piece that a lot of people forget is that, they're humans too that have a job to do, and they're going to find the best way to do that. And you can help them along for the ride, or you make it difficult for them. It's really up to you.
Yeah, that makes sense. And communication is key for just about everything.
Yeah. I mean, the only other thing to add to that is you got to keep the human in the loop for them right now.
Yeah.
I jokingly call, some of these things Skynet, right, from Terminator, because that's what we see on TV, right? AI is going to take over the world. It's going to end up the Matrix or some other kind of craziness. And, uh, is that likely? No, of course not. But, there's a real fear out there that the AI is somehow biased, or it's not taking all components into place to prove why it is and how it is. And that's really not that difficult to do. I mean, banks have been implementing systems and bringing the regulators along for a ride forever. I've done it multiple times where we've switch maybe OFAC scanning tools or transaction monitoring tools, and you run parallel testing and you show them where we had testing and data testing, and it's not difficult, but you can't spring it on them at the end of the day.
That makes sense. So tell me about Sherlock and Moriarty.
Sure. So Sherlock and Moriarty, a little tongue in cheek there, was two AML agents that I was a part of creating from the subject matter expertise standpoint, with a fellow programmer of mine, a friend of mine, I should say, who was a programmer. It's exactly what it sounds like. Sherlock's the investigator. Moriarty, in this case, is not the killer. He's the, but you get the the gist
Right.
there. They're there to do analysis. One from a positive standpoint, one from a negative viewpoint, and then they duke it out on screen live in front of you, and they come up to an ultimate resolution. So I'll give you an example of what we tend to show when we show Sherlock and Moriarty. As you may or may not be aware, you cannot in any way, shape, or form display any personal information of any banking client ever, like just period on this.
Right.
But what you can do is you can sit there and point at regulations and policy all day long. Nobody really keeps that stuff private. It's policy, right? It's procedure.
Mhm.
So the test we like to show on it is around customer due diligence, or CDD. And we fed the bots the FFIEC manual, Secrecy Act, Reg 10, all the regulations we could basically find on this for the United States. And then we said, okay, looking at this bank policy, tell us where, our CDD section is lacking or needs improvement. And what it does is Sherlock comes in first and basically gives you the positive standpoint. It points you based on this part of the manual, you guys do a good job of this, or, whatever it is. And then Moriarty comes in and says, no, you got it all wrong. Here's things that are right and wrong. Ultimately, then they have what we call a debate session. So similar to a court of law, they would make an opening statement on each side, and then they debate each other till the end, ultimately coming to a what we'll call a case summary, and then, actionable items to do to make it stronger based on their analysis. Did I agree with everything they came up with or didn't come up with? No, I didn't, but that's not what you're looking for. You're not looking for protection in a lot of this stuff. What you're looking for is other viewpoints that make this better for everybody to scale on their operations. So where this is really applicable is, all of these consulting firms that do these, $100,000 to $1 million independent reviews of, say, AML programs or fraud programs or whatever else. Instead of having humans sitting there doing this, you can have the AI do all this, spit out reports, and you don't have to go through the whole debate thing like we do for fun, but because we're kind of geeks, right? If you couldn't tell with the name Sherlock and Moriarty. But with that said, you have these action plan items, and you look at them and go, yeah, you know what? This makes sense for that bank or that financial institution to make that change. This would enhance their program. Or no, the risk profile of this bank doesn't make this really relevant. Skip this one. But what it does do is now all of a sudden you've got a human going through maybe 10 or 12 policies a day instead of 1 or 2, because they're not physically looking things up. They're not physically looking how this might apply. They are becoming more, reactive to what the AI can do instead of proactive. But the human is still in the loop. They still have checklists. They still have their items that they may want to keep in play for all this analysis, to continue to enhance, what it is. And then, of course, Sherlock and Moriarty were capable of machine learning. So what that really means is we were able to feed back to them good examples of feedback of either reporting or analysis, and then they take that into account the next time they do their analysis.
Interesting. So given that, have does that support changing the bank's policies, or how does that work into training or review back into, say, the human side of things?
It goes back to the human side of things because you're required to have these independent audits of these programs on an annual basis. Regulations change, rules change, the world changes, their risk profile changes. You can, again, add these things in to say Sherlock and Moriarty, do this analysis and get more feedback that you may not have thought of on your own. It also provides consistent feedback on your policy and procedures because, again, it's going to look at things consistently the same way, regardless of what data you feed it. So one of the things regulators love the most is consistency and analysis, right? If you're going to look at this item this way, you better look at this item this way every single time, or document why there's some type of exception to that analysis. So it helps from the standpoint of being able to then provide another viewpoint at a very low cost to the financial institution, obviously, because it's not a human or an FTE sitting there doing this, and give them better ideas on what they might do that might just be missed in some of the regular analysis. I mean, the amount of regulation out there, say for anti-money laundering alone, right, is just, it's substantial. The FFIC manual is 500 pages. It's massive. It's tedious, and all the different regs and titles and acts. It's a lot for any one person to understand or do. So if you can have it done in a quicker manner and consistently, why not take advantage of that? It just makes sense.
It does make sense. So when we start looking across financial institutions or fintechs, there's always a personnel issue where humans have to adopt or adapt to this new technology. So what cultural or organizational shifts are necessary to effectively adopt AI-driven compliance and these operational resilience technologies?
You need to take the skepticism out of it right away, right? And I think most of the fear and the adverse reaction to bringing these things into organizations is they feel like jobs are on the line at this point. And I don't think AI replaces humans in that manner at this point in time. Will it happen eventually? Sure. Like everything else, it'll be automated to a point where, you're not going to need humans to interact with it. But at least in the foreseeable future, what you're really trying to do is help the bank or the financial institution or the fintech get more done better so that they don't have to scale as much as business increases. So in other words, let's say I have 500 clients, I need 5 people to get through it and do all the work. With AI, I may be able to get to 600 or 700 clients without hiring additional people. I don't see me laying people off because of this, because I still need that analysis to be done properly or thought through by humans, right? But it does mean that myself as a human can probably get through more items a day. In other words, I'll go back to the transaction monitoring example and pulling stuff in for the pizza parlor, right? If I don't have to go look at that 6 months of data and it's already pulled into a folder for me, if I don't have to go Google that institution and pull all that into a folder for me, if I don't have to go to the files and get their CDD information or their KYC information, pull that in, that's an hour and a half, 2 hours of work I no longer have to do. So instead of getting through 4 clients a day or 4 alerts a day or 4 reviews a day, I might be able to get through 8 to 10 because I just need to go validate that information looks accurate and that it makes sense to what it is. And now I get to spend more time actually doing the review versus, spending time pulling data for the review.
Yeah, that makes sense. So we start looking at risk appetites. They're going to be different between a bank and a fintech. So how would you advise each of these types to think differently about AI automation in compliance, especially when regulators may view fintech risk profiles and governance differently?
I'm going to say this kind of tongue in cheek. Fintechs have their days coming, right? I mean, we never would have thought 20 years ago that brokerage houses would have had to worry about AML and KYC and everything else. We just didn't, right?
Yeah,
I mean,
right.
When you really think about it and you look back even on the Bank Secrecy Act or the Know Your Customer rules or even the new CDD rules, you're talking about 20, 25, 30 years ago. You're not talking about, 50, 60 years ago. A lot of this stuff is relatively new. So as we all know, regulation only tends to increase. I don't ever see it decreasing. So because of that, at some point, the fintechs will also be held to the same standards that the financial institutions will be held to. Being prepared for that in a manner, not necessarily to the lengths and depths of what a bank has to do from a compliance standpoint, but the awareness or having somebody come in to do that kind of a review and let you know what you need and everything like that, I think is key to understanding where you might have to go and what you might need to do. But being aware that if you are a fintech and you're dealing with a bank, they are held to those obligations anyways. So their unwillingness to abide by these rules do not make it easier for the financial institutions to help the fintechs get any further along, right? These fintechs need the financial institutions for whatever it is, liquidity, money movement, whatever those things are. And if they're not willing to, work with the banks on these things, then they're going to run into bigger problems. So the way I kind of look at it is no, if you're a fintech, you don't have to do the things banks have to do, but you need to be aware of what those things are and possibly how they apply to you, and then help the banks along to make your lives better. That's how I look at this. Because again, I just see it, down the road. Eventually there'll be more rules on cryptocurrency. Eventually there'll be more rules on marijuana. Eventually there'll be more rules on, pick any X topic and throw it in there, and that'll be there. You'll be right. You'll be right. You can say whatever you want, more reg, and you'll be right eventually.
That makes sense. Sure. So as we look at AI shifting from tactical tools to more strategic infrastructure, what advice would you give leaders who want to move beyond their current pilot projects and deeply embed AI into this compliance, risk, and resilience functions, both technically, but also organizationally?
Let's start to build that culture. You've got to get people on board, and you have to build that culture. You have to be as transparent with everybody as you possibly can with what you're trying to do, what you're trying to accomplish, and why you're trying to accomplish it. You're going to automatically, anytime something new comes into any organization, you might have some attrition just based on, the scariness of the new, right? Or some people don't want to deal with that. Some people don't want to be a part of a big, massive change of operations or technology or whatever else. They don't necessarily want to be a part of that. You need those workers that want to do their job as much as you need those leaders that want to, lead into something new. And so getting everybody on the same page and being transparent about what that's going to mean for that organization, I think is key in step one. You have to get buy-in from everybody, or from every department. I shouldn't say everybody, but from every department. I think where a lot of companies make the mistakes is they operate in a vacuum and they feel it's the best way for whatever reason. I mean, think about all these studies about how it's best to lay off people on a Friday afternoon, and then, all this stuff that goes on, right? But it's not necessary if you're doing the right things to begin with up front with this in this case, right? So having a real plan and working with a real strategic partner to help you get that information out to the organization is step one. Step two is showing the benefits and to some degree the drawbacks. Let's be honest. This isn't all pie in the sky and everything's sunshine and rainbows with this stuff yet. It's not drag and drop. You're not plugging in a camera to your computer and it just works. That's not how any of this is. So there's a lot more to it to help bringing people along for the journey, including the regulators, as we mentioned earlier, to making them a part of the program and a part of this step or this shift. That's the key to all this stuff, is making people feel they're a part of the shift. They're not going along with it, they're a part of it. And I think that's where a lot of organizations make that mistake.
So how would you advise leaders who've been through this a few times before and are maybe either skeptical or maybe at least a lot more risk averse than perhaps others who haven't been this before?
I think it's first and foremost looking at how you did this in the past and what the outcomes were. What was your after action report or your lessons learned report? I hear it called all different things, all the time. Why did that occur, or why did those struggles occur the way they did? Can you pinpoint what that is? Then it's understanding how you could possibly do it better. And it's getting the right people in the room to do that. It may not necessarily be, your first line managers. It may not be. I mean, it depends on the organization. It depends on the structure. Those first line managers, depending about how the structure is set up, may not be enough in the weeds to truly understand the outcome or the output of this. And you need somebody at a more tactical level to really be a part of the program to get this done and have it done properly. So it's a two-step process of look at what happened in the past and why it happened, and then looking at how you can make that process better, making sure you've got the right people in the room. And it's also to some degree making sure that those managers know, look, this isn't a slight, right? I manage, 4 different departments. I manage, if you were to add all the people, quote unquote, I manage, it's roughly 65 people. I can't possibly be in the day-to-day weeds and say, clearing an ACH or a wire. I can't. There's no way I can possibly do that effectively. So when new rules and regs come up that affect that process, I go to the people that do it on a regular basis. They know more than me, and that's okay, right? They're supposed to. That's the point. So that's where, taking these extra steps and doing this in a reasonable, common sense manner is most important for all these things. That'll change the culture too, right? When those in the weeds workers feel that they're part of the major shift and they're part of this change, and they don't necessarily get a say in it, right? It's not that they get to make a decision, but they get to be heard on what and how things are done. It changes their perception of management in the company. It does, in a good way.
So kind of going along those themes, executive management has maybe a different perspective to the broader business goals than perhaps a first-line manager or folks that are doing it on a tactical basis. So when we see that their viewpoint says we need to adopt this new stance, or we need to be more effective in how we do this. Otherwise, our business is at risk in terms of our growth, in terms of what our investors are expecting from us. So when you look at from that perspective, and executive management maybe sets very high or lofty goals associated with that involve a lot of AI or a lot of changes that could be very impactful, both from a good side in terms of how the business could grow, but also as a potential negative for the people who may not necessarily know this is coming. How do you adopt a culture from the top down, or how would you advise an organization to adopt a culture from the top down to make that that blow lessened, and maybe make the ownership of these changes come from a ground up?
I mean, first and foremost, I'm probably an outlier in this. Transparency for me, having been in the regulatory compliance space for as long as I have, is everything, right? And that doesn't mean you give away the special recipe or anything like that, but having people understand the purpose of the project, I think, is key. And usually what happens in most corporate settings, and I'm sure you've been a part of them, I've been a part of many, you get the 8 or 10 managers in a room, you tell them what the project is, you have some one sentence, corporate speak as to why it's got to be done, and then it's just go get it done. I don't think that works in this day and age anymore. I don't think people that sit in the weeds look at things the same way we did. And that's okay. And there's drawbacks and there's positives to that, right? But as the world shifts, as executive leaders, you have to shift with it. You're not going to hire enough people to think your way to get things done properly in this day and age. So you have to be transparent as to why. Now, that again doesn't mean you give away the 11 herbs and spices of KFC, but you say, you can be very upfront with this in a vague way and say, hey, we need to get better at this. It's costing the organization a lot of money and a lot of risk. And so we need to get better at this. And here's why we're going to go about it. I think most people would accept that answer as a reasonable answer and won't feel slighted by it. Where you can, and again, not every time and every leadership is able to do this, where you can, you say, we're not looking to replace humans, we're looking to scale up. And again, that's a reasonable, common sense thing that I think most people can understand. If I can go to my people and say, hey, if we add this AI bot into this specific instance, you can get through 8 to 10 and never feel like you're behind the gun versus 2 to 4. Most people are reasonable. Most reasonable people are going to be okay with that, and they're not going to think anything of it. And you don't necessarily have to say what that really means is, I'm not going to hire 3 extra people like I normally would, because you won't need to say it. They won't feel the pressure of it at that point in time. So, I say that's where you start. I think too, executives tend to forget what it's to be in that trench because they're so far removed from it at that point. And I think the challenge that they have is they're under a new kind or a different kind of pressure than they were when they were in the trench. And so their concerns at the top aren't the concerns of the people sitting in the trenches. And because of that, they need to look at it from their perspective and remember what it's like sitting there. If you hear layoffs are coming, you're human. You're going to protect yourself. So if you feel AI brings layoffs, you're protecting yourself, which means what? You're probably looking for a new job. You're probably jumping ship. And now as an executive leader, with having been a little more transparent, you may have pushed off having these additional problems during the transition because you were just a little more open than you were previously. And by doing so, you develop that culture where people trust you. And that first project just leads to a much easier second project. And by the time you get to the third or fourth project of doing this, everybody saw how at the end of the day made their lives better. You don't have to have those conversations anymore. The trust is now there. And that's where I think a lot of it stems from. Executives come in, say, we're doing X, only managers involved in the X, and nobody else hears it. So everybody else just panics.
Yeah. Okay. Last question. If you're thinking about the technologies that are existing and maybe those that may come about in the next 6 to 12 months, what's the most interesting or what's the most enthusiastic part of it that you see from a banking compliance standpoint going forward?
Well, I look at the technology in one sense and the regulatory on a different lens, right? We're hearing a lot about the lightening up, if you will, of regulatory requirements on banks. I am personally for this to some degree. I think like everything else, rules and regs add on and add on and add on to a point where they're not fundamentally attacking the risks they were originally after. Back when KYC started, you needed to know 4 or 5 data points. And then it became CDD. And that's, let's say another 20, 30 points. And then this gets tacked on. And then it's beneficial ownership. And then it's that. And then it's that. All of a sudden, you're collecting 160 data points. And I'm exaggerating on purpose. But you don't really know your customer anymore because you're not having that real conversation with them anymore. You're just collecting data to get through the process of getting a bank account open or a CD opened or whatever it is, right? So you're missing the whole point of what the regs were really intended for in the first standpoint. So, or in the first place. So you've got the regulatory side of this. As far as the technology side of this, what I'm excited about, I think the most is to see what really exists out there from an AI standpoint already. Right. And I when I do a lot of my presentations and we talk about AI and the different types of AI, forgive me, I don't remember the exact year, but do you remember Dolly the sheep?
Yes, I do. I do.
So do you know that sheep was almost 10 months old when we found out the clone sheep existed? So we already cloned the sheep for 10 months, right? You want to hear something more disturbing? She was like this 267th attempt in cloning that sheep. So how many years had they been working on cloning and ultimately developed this clone sheep? You want to hear something more disturbing? In 1965, we were already cloning frogs. So I think much more advanced AI is already out there. I think it's not as openly put up as we're aware of for various reasons, right? Sure. Companies are getting their patents in place. Technology is advancing on a regular basis. What Sherlock and Moriarty were built on less than, we'll say, 18 months ago is somewhat obsolete. And we've already, revamped them for that purpose, right? Because the technology is just advanced. So I'm excited to see what's kind of already out there and what's just going to become public. I mean, Elon Musk is dropping now the production of two Tesla models to basically build robots now. I mean, that's not a whim, right? There's a reason for that. There's a reason that that's occurring and those things are going on. So, what is going to be out there in those few months and what we're going to see kind of evolve from that standpoint. That's what's exciting to me at this point. As I help companies build these, slices of automation with AI and decision-making capabilities, seeing what we're able to do next with some of these things has always been the most fun of this. And I feel like I've barely scratched the surface, Michael. I mean, like It's sure we've done a lot around automation and decision making, but I mean we're just partially there. It's not even close.
And it's only going to get better from here, isn't it?
So it is, and it's exciting. It's a lot of fun.
Robert, thank you so much for your insights and your observations. Really appreciate you joining us today.
No, thank you for having me. I love talking about this stuff. I can go on for hours about this.
Thanks for listening to Transform Now, the podcast from SS&C Blue Prism. You can find all of our episodes on your favorite podcast channel, as well as YouTube. To stay on top of the hottest topics in the world of agentic automation, subscribe now. The future of work is here.